All right, how's it going, everyone? Welcome back to Cup of Joe Investing. So, not going to talk about college, not going to talk about calculus. Still doing it, still going on. If you know, you know. I do want to start, however, wild Trump tweet. So, Trump just tweeted, "So glad to have our free Caribbean border, the Caribbean islands." So, if you're not obsessed with Trump and living a normal life, you probably missed it because it was at 3:30 in the morning when he regularly tweets, as most of us do. And he also said he's going to make Haiti pay for it. Haiti pays for most things anyway that happen in the world, especially bad things, so that's nothing new. And he also said he's going to ban hurricanes that have Hispanic names or Arabic names, of course, from coming into the country, specifically Florida. Very good news for Cubans, though. Looks like the Cuban-American relationship is going to keep strong through all of this. And the unfortunate thing is that no one told him that all these hurricanes have American names. So unfortunately, we're not going to stop any hurricanes. So thanks very much, the Caribbean. Just to clear things up, if you don't know, that was a joke. Please don't call all your friends saying that Trump just called the Caribbean the southern border. Call them and tell them I said the Caribbean is the southern border. I think comedy is really cool. I've been trying to get into it. It's a little pretentious though because, you never know when comedy is going to arise. So to always be carrying around like a notebook or have to write things you say down in your notes, it's a little pretentious in my opinion. I don't think everything I say is that funny. But this isn't any joke right here. These are the top 3 MVP stats that I look for in a stock. So I tried to make an analogy, right? There's plenty of stocks and there's plenty of players, right? Let's say a soccer player, an NBA player. If you want to build a franchise or a portfolio around one stock or one player, there are some key things that you should look at from the very beginning before you invest all this time and literal money into the player or stock. So number 1, it should have increasing revenue / decreasing net loss. And that's pretty obvious. You obviously want a company that keeps making more and more revenue. Companies losing revenue, not only is that not a good sign for the company, but it's probably an indication for the future of the industry. I want 20+% growth, especially if it's producing a net loss. If your company is losing money and it's not increasing revenue, that is a red flag, okay? That's like when you're on a date with a girl and you keep talking. Red flag. However, there are companies that don't need increasing revenues. Coca-Cola makes plenty of profit, thus their increasing revenue doesn't need to be spectacular. Number 2, you need a superb management team. Oh, also, by the way, there's going to be examples of where to find these things and how to look at them coming up. But number 2, you need a superb management team / industry passion, right? If you look at the stock and you look at the CEO and you see he's only been working for a public company for a year, he used to work as a vice president or something, he didn't do anything big, you gotta really like the CEO. There's a reason Steve Jobs made Apple the company and Apple the stock so successful. He would have been producing iPhones whether he was the number 1 multimillionaire in the world or some guy tripping off acid in California. He just loved the industry. Number 3, you gotta like the industry ratio comparables. So there's plenty of ratios out there that you can find that if you compare them to industry standards, right? So if you're comparing Coca-Cola to Pepsi, you want them to have the same kind of price to book ratios, you want them to have the same kind of cash flow and balance sheet. You don't want to be overpaying for a shittier business, right? That's never a good thing. The 3 ways this relates to athletes is you always want them to be increasing in skill / points, assists, games in soccer or basketball. You want them to be passionate about the sport they're in. If they're not passionate about the sport, then they wouldn't be enduring everything you have to endure in order to become a great athlete. And then also, you want to look at the comparables, right? If LeBron James can't shoot a 3, but Luka Doncic can make a step back 3, then who do you really want to build your franchise around? The Lakers did a bad job. So now let's get into the examples. So number 1 is you look at the income statement in order to find increasing revenue, net profit, operating margin, all these key metrics for a growing business that should all be increasing. That's where you find them. And not only do you want revenue to be increasing, this is a big one, you want to look into past years and make sure it's consistent, right? If this year they grew by 50% and the next year they're growing by 20% and 2 years ago they grew by 13%, what's going on? And maybe 5 years ago they lost 5%. Maybe it was a big one-time expense, but you gotta look into these things. Number 2, gotta listen to the conference call. That's where the CEO lets you know what's up, lets you know what's going on in their business. And the big thing to look for in the conference call, and I only listen to conference calls that I actually care about, the rest I just read through them, is you have to look for the tonality of the CEO, right? When I was listening to the tonality of the Zuora CEO, he sounded ecstatic. He sounded like he couldn't wait for this business to keep growing, couldn't believe the amount of opportunities he's had, the amount of business ventures that are going on. You want them to be excited and you want them to have experience, right? You want them to recall how they dealt with certain situations, how they manage certain trivial things that happen in business. And then the third one is pretty basic. These are just formulas / ratios you gotta know. You gotta know the forward PE, the forward price to earnings ratio. That's essentially what the stock market believes the price is worth. Because no one's paying for a stock for what it's worth now, they're paying for what it's worth in the future. That's why they're buying it from you now and gonna sell it to someone else in the future. You wanna look at the price to sales. If their price to sales is too high, that usually means that you have an overvalued market or overvalued stock. That's another red flag. And you want to look at the profit margin, right? So if they are making a shitty profit margin and they're a tech company, that's not very good. Usually tech companies have huge margins, especially if you compare your company and its profit margins to another company and the other company has better margins, because that means their business is being run more efficiently and for less cost. And that, you gotta hit the books. You gotta go to Yahoo Finance. If you're blessed to work at an investment firm like I was for a couple months, look at the Bloomberg terminal. It's literally the terminal to success. And the number one most important thing you gotta do is believe. You gotta believe in the stock. Because here's what happens. You choose a stock, you greatly enjoy it, you do a lot of research, but then an analyst downgrades it. And then the earnings come out and the stock market overreacts and there's a huge sell-off. You gotta believe in yourself and believe that the stock you chose is going to increase in the future because of actual valuable information, not just because there's a red line going down and you lost $500. Not a good reason to sell a stock. Don't ever do it. And then the final thing is that I don't make sense. I make dollars because dollars make sense. Make sense? Good. All right, guys. That's the final episode of this is actually the first episode of Cup of Joe Investing. I'm going to really try to add more fun. I'm not out here trying to be like a CNBC reporter just giving you the facts. I know that very valuable in my business to know the numbers and know the books, but I'm here to entertain and I'm here to give you guys good information. Hope you enjoyed. Bye-bye.